Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 28th of February 2021. And this is our second video today. This one is focusing on why green investment, green energy, biodiversity and climate change could prove to be silver's saviour. So let's take a look. A few hours ago, we produced a video entitled Bitcoin versus Gold and Silver, Episode 13, Everything is Falling, where we looked at the future direction for Bitcoin, gold and silver. And we've placed links to this below. Now, one of the questions we're frequently asked is where do we see silver prices heading in the mid or medium to long term? And what's actually going to cause these price movements? Well, we've stated frequently that the 2020s will be the decade for precious metal prices for a multitude of reasons. Partly because of their underperformance compared with other asset classes, though gold, in fairness, did begin to make up for that, particularly when it peaked in August last year. Secondly, because of supply versus demand issues, and especially supply, whilst available, is becoming more difficult or expensive to extract. And a third reason, which we're looking at primarily today, is the trend towards green investments and the flight by investors to climate change and the biodiversity sector friendly ends of the marketplace or the financial marketplace. You see, silver, as we all know, is used in a number of products which can be or are environmentally friendly, solar panel being a good example, and certain battery components. Platinum too, traditionally used in catalytic converters, has seen its price begin to rise at last because of the part it will play and has played in ever-increasing green energy and green investment focus. We've already seen, over the past 2 years or more, the huge increase in palladium prices for similar such reasons, though not entirely down to just green energy. Moving forward, silver, which is relatively cheap and still only at around 50% of its all-time high in US dollar terms, certainly has a rosy future. And with President Biden winning the US election and re-signing up to the Paris Climate Accord or agreement, is certainly setting the scene for a positive future for this precious metal in this rather mysterious world of green energy and climate change. Now, there are many articles we can choose to support this conclusion, but two published by Bloomberg this past week certainly exemplifies how even other investment instruments are also being created in order to satisfy this green demand. Let's take a look at both of them. We'll run them back to back. One is very short, the other is slightly longer. Bloomberg article dated February 25th, 2021. Nature bonds may be the next big thing for emerging markets. Emerging market nations are looking at issuing the first nature-linked bonds as part of talks involving the World Bank and major sovereign creditors to make their debt more sustainable. The proposals aim to link new debt to targets for biodiversity and carbon emissions, according to Simon Zadek, chair of the Finance for Biodiversity Initiative, which published the plans on Thursday. Pakistan could be the first out of the blocks to issue such nature bonds. The discussion on greening sovereign debt involving the US, China, the UK and Germany come as mitigating climate change and spending to recover from the pandemic have climbed to the top of the agenda for governments. Among the ideas are plans for an advisory hub to match borrowers with creditors at a time of surging investor demand for environmental assets. This year provides an historic opportunity to harvest a double dividend by aligning sovereign debt relief with nature and climate outcomes, said Zadek, who previously led a green finance task force for the United Nations. The only reason we need this platform is because investment banks don't know much about this subject. The group's proposals would tie the cost of debt repayments to quantify biodiversity and emissions reductions targets, meaning borrowers would have to pay less interest if they hit those. Countries might also be able to pay back debt using carbon credits. Pakistan is said to use this system to issue a so-called nature performance bond of up to $1 billion this year, according to Malik Amin Aslam, a climate change advisor to Prime Minister Imran Khan. His government has been a heavy user of coal for power generation, yet aims to use greener energy and plant more, almost 10 billion trees by 2023. We could actually tie our sovereign debt retirement to our nature-based performance, Aslam said in an interview. It's a win-win for us because it's helping us do what we wanted to do, but at the same time creating a novel instrument to finance that whole process. End of article. Bloomberg article dated February 28, 2021. Headline: Debt engineers tackle climate change with bonds to real wild land. For green finance enthusiasts, a new flavour of debt could emerge this year: nature bonds. Sales of green bonds, which typically raise money for clean energy projects, are expected to grow by a third this year to record levels, as governments and companies look to capitalise on booming demand at the same time as bolstering their image. Yet academics and activists say this alone isn't enough to save the planet. They're lobbying for securities that more explicitly protect the natural world, and are likely to get a hearing from policymakers when the United Nations meet in coming months to discuss biodiversity and climate change. Those issues are climbing up the agenda as governments decide how to spend trillions to recover from the virus. Quote, sovereign bonds are obviously so important now, with the crisis response and then the economic recovery, and nature should be right at the heart of that, unquote, said Nick Robbins, a professor at the London School of Economics, Grantham Research Institute, and a former fund manager. Nature-based solutions for climate change can be very labour-intensive, so if you're thinking about financing a green recovery, they are a really good place to prioritise your public spending. Countries could pay less interest on the debt if they meet environmental targets. That's a similar approach to so-called sustainability-linked bonds for companies, which have been exploding in use this year. Research organisation Finance for Biodiversity Initiative has a framework for how such nature performance bonds could operate in practice. It's in talks together with the World Bank, the US, China and European countries to also potentially offer debt relief to emerging market nations if they can green their borrowing in this manner. Pakistan could be the first out of the blocks to issue up to $1 billion of these so-called nature performance bonds this year, according to Malik Amin Aslam, a climate change advisor to Prime Minister Imran Khan. Uruguay is also exploring such bonds, its debt chief Herman Camille said. There are also alternative suggestions. Henry Boucher, Deputy Chief Investment Officer at Saracen and Partners LLP, was spurred into action after the Intergovernmental Panel on Climate Change pointed to land use as accounting for a quarter of man-made greenhouse gas emissions. He called his proposal Eden bonds. His idea is for governments to issue long-term debt to buy private land and essentially pay investors interest to keep it wild. Investors could then supplement this income by selling carbon credits or credits linked to species restoration. When the bond matures, the government would pay back its debt, leaving the public sector owning the land. We're getting to a point where we have very little nature capital stock left, said Boucher in an interview. Why issue more debt to buy land today when you're already maxed out on issuance to pay for the pandemic? The answer is that climate change and biodiversity loss are even bigger problems. While the management of nature may significantly affect nations' long-term economic outlook, an issue especially pertinent to commodity producers, so far investors have mostly focused on more conventional considerations such as debt-to-growth ratios. It's only now that governments and credit rating agencies are looking to put a price on climate risks or opportunities. If Nairobi runs out of water, that has got to affect Kenya's sovereign debt surely, said Martin Wilder, co-founding partner of HSBC Pollination, which aims to be the world's largest manager of natural capital assets. But people aren't thinking about that. These are just things people don't get. We've just got to recognise we're at the start of a journey, really. Existing bond frameworks have already been used in some cases to preserve nature. Poland issued the first sovereign green bond in 2016, saying it would spend some money or some of the money, on natural parks. France also put biodiversity protection as one of the uses for its inaugural offering, while the Seychelles pioneered blue bonds in 2018 to support sustainable fisheries. The topic of biodiversity, maintaining a variety of plant and animal life, will be the focus of a United Nations conference in China in May, and then a theme at the next major climate change conference in November in Glasgow. It's expected to lead to more specific targets after dozens of countries pledged last year to reverse biodiversity loss by 2030. It's also been given a spur by the election of US President Joe Biden, who has promised to conserve 30% of US land by 2030, and by a recent UK government review led by Partha Dasgupta that emphasised taking into account the value of nature. As demand for environmental, social and governance assets takes off, specialist investors are keen. The risk, however, is a fragmentation of the green finance market with so many different flavours of bonds. If there's a way for sovereigns to do that in a mainstream market way, a benchmark issuance that's index eligible, you can have your cake and eat it, said Christopher Kaminica, who leads the sustainable investment team at Lombard Odier Investment Managers. Okay, so there we have it. Green bonds. A challenge perhaps to silver as an investment vehicle, but certainly no challenge to physical silver demand as an industrial metal. In fact, the creation of such instruments may encourage and prove as a tailwind for physical silver demand, as well as platinum and some of the other industrial metals. And who really knows where that price appreciation can actually move to? Do share your thoughts. Let us know if you agree that this perhaps will prove eventually, maybe not tomorrow, but in the years to come, to be the true saviour of what many regard as what will then become the real price for silver. Thank you for listening. Share your thoughts, and if you haven't done so, please subscribe to the channel. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.